Hey traders, Joe Baker, doing a little bit of an update for you. I have not done any updates as of late. There really hasn't been much to talk about. The market's been pretty much range bound for a few months now, and not really doing much of really anything, upside or downside. At this point in time, the volatility has stayed contained within daily ranges. Okay, in other words, we're not getting those 800 or 900 point days that we were getting, and the market's pretty much acting and behaving as it should. But again, we're getting up towards areas that I think should be noted. Okay, so the 849, 850 area, which is right here. Okay, I'm just going to change the color here so you guys can see what I'm trying to see here. So here's your 849.50, actually 849 or 850 area, and you can see how it has been resistance on the body here, comes up, down, pulls right back down to it, comes right back down, pulls back down here, comes up to it here again and pulls back, comes up here to it, pulls back again. Now look what happened when you broke over it. Okay, and this is what I'm trying to say is I think a lot what's happening is with these consolidated ranges. Okay, just think about it. Just imagine compiling a lot more contracts, a lot more traders into more of a compact range. So again, you get a break above here, and you can get these pops. Okay, only to come right back down. Again, right here, resistance again, and then resistance again, and then resistance again. If we do take this area out, that's the 849.50. I think we can get a shot right to the 858s. Okay, and then I think we could probably head up to well, let's say on the upper edge, 71s to 72s. Okay, so let's look at it here. We got the 850s. I think it's going to be a straight shot to 858 if we clearly take this area out. And then back up to the 872 area, 871s. Okay, so that's what we've got for the upside. And again, on the downside, it really can be 26s and around the 18s. Okay, so I mean, really, we just keep consolidating until either we break out to the upside or break down, and what that is going to have to take, okay, would be have to take this whole base area out at the 798s. Okay, because I've actually put that out there for you guys. Okay, so really we're contained in this little trading box here, and again we're at the upper edge, so we may see some sort of a pullback tomorrow. If we don't, okay, we'll get a breakout, but you at least know where we're going to go. We got 858s and then 872s. Okay, let's get over to the intraday chart to show you what would have to transpire for something like that to happen intraday. Okay, no, obviously a lot of you do not have any of the software that we have in our room, but you're more than welcome to come in into our room. I mean, again, I've offered all of you out there that do want to, take some note on, market structure, how markets play out, your probabilities of more further downside or increased upside throughout the day. There's just so much to know about trading in the market structure as a whole. I think it's a good wealth of information for anybody that wants to stop on by. So again, open invitation for all of you to do that. Try to see if I can get this thing locked in a little bit better here. Okay, so here we go. This is today's chart, and this is exactly what you want to look for to, again, either give yourself a corrective bias, okay, which I had to have one corrected today. I was looking at the 816.75s to be taken out because it's not a number. Okay, it's not a number that should have stopped the market from falling and would reverse, the market for the day. And something had taken place where I say, okay, it's over. All right. And that was taking out midpoint pivot. Okay, and that's the midpoint of the day. So take out midpoint pivot. Again, I've always mentioned bulls live above, bears live below. So now we're in bull territory. So where's your next area of interest? Your next area of interest is your first hour high, and that's at the 25.50 area. Once this market took out the 25.50, right in here, okay, she never looked back. All right, and this is something that can go that just happens day in, day out, day in, day out. It's open game after that. You can come back down and retest that area, but you can see clearly the amount of stops that were taken out, okay, or quote the short squeeze that took place, okay, right after this first hour high was taken out. So really what happened is a majority of the traders, and I would say a big majority of the traders, had their stops right above the first hour high, and they got pushed and squeezed and taken out. So, again, this is where it really helps in kind of judging whether you're going to hit your upside targets or your downside targets, the market structure of the day. If you look at all these, in all the markets as well. So if you look at it on, the S&P, the NASDAQ, the Dow, and even that little Russell, okay, it can give you a little bit of a heads up. And today, the NASDAQ, though the futures were down overnight considerably, just basically on the open, just ripped up and got above its midpoint pivot and just was a straight up shot. So again, everybody got caught on the wrong side of the trade today. How do I know that? I know that by price action. This proves to me that everyone got caught on the wrong side of the trade because of the movement. Okay, remember, markets move because they have to, not because they want to. And I think that you got to understand, where are the traders? Where are they in relation to price is what's most important. And that being said, I think if anybody is trading intraday and they literally do not know where the traders are, I have no idea how you trade. So again, you're more than welcome to come into our room. We'll explain, show you what we use on an intraday basis to give us that information, and I find it totally invaluable. I literally could not trade without it. So that being said, going forward, are we going to break out? That's why it's important. I was trying to show you this intraday chart, is because if we are above midpoint pivot, if we're above first hour high, if we have bullish conditions and we're coming into that 850 area, okay, then yes, the probabilities are more so that we're going to hit the 858s, okay, than to fade that area, okay, and you don't want to get caught, all right, with that 8 or 10 point swing that this market's going to push, okay, and that's why I'm telling you this. So if you have a bullish condition, okay, coupled with an area of breakout, okay, or a known level, okay, intraday, then obviously stops are going to get hit and the market's going to race. So, or it would sell off and go back to the downside. A lot of the greatest trade setups are a market that opens up above the midpoint pivot, comes down to it, and then rallies back up, or the vice versa, where it opens below midpoint, comes down, drops, and then comes back up and then rolls back down again. So today we had kind of a very interesting day where the market opened up, came down, broke it, made your first hour low, came up, and basically once it got above midpoint pivot, it was a never look back scenario. So again, guys, just shoot me an email and I'll shoot you over a password. You can enter the room. If you don't like to stay, it's no questions asked. We bid you a farewell very easily. Just don't show up anymore. That's it. So no questions asked, but I would love to have you. Take care, guys, and I'll try to update you. Bye-bye.